What's up everybody, Tom here with another video. In today's video, we'll be covering our technical analysis levels for the S&P 500 together, Nasdaq, Bitcoin, Tesla, AMC, gold, dollar index, and more. Yesterday, we saw the beginnings of potentially a dollar index move. This is ahead of the jobs numbers this Friday, which almost everyone's saying is going to knock it out of the park. Will this be true? And what's the stock market going to do next? Stay tuned to find out more. Okay guys, well this begins our recap of the markets that closed on the 29th of June 2021. And straight away we want to be taking a look at a heat map here for the S&P 500 large companies to get a bit of a lie of the land, to understand what happened and where Wall Street was moving the money. Straight away, my eye goes to utilities. You can see the market was clearly down there. Banks also suffered a little bit, and tech was mixed across the board. When we have a look at the Nasdaq, you'll see what happened. The Nasdaq went up 0.35%. Russell 2000 down again 0.48%, and S&P 500 and Dow Jones flat as a tack. And it actually started a little bit differently to this. So we saw a little bit of a false kind of move here on the Nasdaq early, with its opening down, moving up through the day, and the other markets opening up and moving down through the day. Bizarre stuff, but this is the games that Wall Street likes to play. Remember, the close is always the key. So utilities, it's not the time for them yet. Eventually utilities will come in. They are more a mid to late cycle of a bull run type of play. But you can see here they're down 1.62% on the day. Technology, followed by the usual second favorite, which is consumer discretionary. And then our favorites at the moment, which is IBB and XLV. All our favorites were out in front, followed by the value kind of plays lagging a little bit behind. If you've missed the current videos, recently we've been talking about the performance of June, the performance of July, and the performance of August. This is the last 10 years data on average, and you can see the returns here for August and July have generally been quite good. They are being skewed a little bit by last year. But I guess what we're trying to get into everyone's mind is that if you think about statistics and you think about the seasonals, July often is a pretty good month. We're looking at technicals that are breaking out to new highs, and unless the information changes and the technicals change, we have to kind of follow what Wall Street's telling us, what the stats are telling us. And that's a lot of what trading and investing is. Following the data more than following your opinion. We always say you've got to leave your opinions at the door and just follow what the price action and what the markets are telling you. Try to not fall into the trap of all of the fake kind of news and that type of thing. We want to be focusing on the charts themselves. Speaking of the charts, let's start off here with the dollar index. Let's take a quick look at what's going on with the dollar index, and you can clearly see a breakout above this 91.90. It's kind of trending up here on the 1 hour 20 moving average, but it's weakening at this stage. Probably need a 92.10 closure over the next couple of hours at the time of this recording to really solidify further bullish pressure for the dollar index. But I think the problem here is, well, firstly, it's moving ahead of the jobs number. So when you look at this on a daily, you think, yeah, that looks pretty good. It looks like bullish US dollar, and possibly the US dollar goes up to like a 92.40 before the jobs number on Friday. Non-farms, of course, coming out of the US, the most important bit of information every month, really for the markets overall in the Western societies. And you think about this 92.40, and you think about usually a market will go towards a key resistance or a key support before an earnings release or before a big bit of news. So that's kind of pointing towards further bullish dollar strength this week, and then we'll see whether the jobs number push it through. Now, what has this meant for gold? Well, it's actually pushed gold underneath our barrier here. 1760 was breached yesterday on the 4 hour. Let's take a look at our favorite time frame, the 8 hour. You can also see the 8 hour confirmed below. Now we're coming back to what we would call the conservative entry. So support, which is over here. This is where the buying pressure, the buying demand is, becomes resistance, and the sellers now are jumping in to potentially sell it at this point. And we've got to start breaking down this and understanding what the price action is telling us. So at this point, we've kind of got like a peak, we've got a trough, we've got a slight lower peak on a smaller time frame here. Do we get a lower trough? Do we close underneath here? So just because it's come back to what we call a conservative entry, we don't really want to fall into the trap of getting stuck in a trade that's not going to go in our direction. So because it's pulled back, we usually want to wait for lightning bolt style moves and then hopefully get that follow through towards the downside. We also need to be very careful here, because if you notice where the daily is closed, it's straight around that 1760 area, so straight around the buying demand. daily is more important than any of the other time frames we've looked at so far, so you can see that. I tend to think, yeah, this looks short purely because of all these candles. We've got rejection wick, rejection wick, rejection wick, rejection wick. What's that telling us? Every time the buyers have come into gold, they've been instantly, the rally has been squashed by Wall Street. So next stop for gold could be as low as something like a 1720. That's a movement down here towards that. Now, if it gets through 1720, next stop, 1680. I'm sure many gold fans will not want to hold that unless you're looking at buying the lows. But yeah, these are the levels that I'll be focusing on and we'll have to be looking at. And it's at a critical zone now in the Asian European session for gold. Will it be able to hold this level and move back up? Or is it going to turn around pretty much instantaneously? And I think where you'll see probably the big fight between the bulls and the bears is going to be at these highs now. I'm looking for a closure below, but if it gets above 1765, things certainly could be going more bullish, and this may have just been a false break. You'll be careful in the markets. You've got to know the things that you're looking at, and that's one of the things that we try to cover here on the channel. People that are trading black gold, US oil, you can see the support at 72.52. Closure is the key. 2 hour here. Look at all those closures. Let's have a look at the 8 hour. Again, buying wicks, buying pressure coming through around this zone. It did pull back, and it's pulled back relatively, far here. You can see the 4 hour, 50. It seems to be going underneath that a little bit and then buying through. For black gold fans, you won't be sure that it's going super long yet until it gets through 74.21, and then hopefully it goes towards 75.76. But that was a great recovery off that 72.50 yesterday. Beautiful buying pressure, and hopefully it continues. I've said this for a few days now. I kind of believe it's in a sideways action as it coils and solidifies its position ahead of what's been an incredible move. I mean, when we look at the weekly 20 mean reversion, which is this red line, it's so far away from it. It's time for it to take a bit of a breather, take a couple of steps back, and then think about it. And that's where, as a trader, once you recognize the market's hit that level, usually then you start scaling out, or you make a new decision moving forward when you see the next breakout. Thinking of decisions and things that aren't doing much, it's our AMC and the GME crowd. We've had some rallies in the start of the day, followed by sell-offs, etc., etc. We're still stuck between the two big ranges, that 52.35 and 63 kind of 30 zone, 20 zone is the resistance. We're still stuck in that. We've got our proofing, so that basically means that we've got our 1, 1, 2, 2 movement. That means we have a channel, and a fully fledged channel. If it breaks either way, what happens? We expect to either go to 40.53, or we expect maybe even an all-time high on the top side. These are the types of things that you want to look for in the market, and it looks like we've got another very important kind of closure breakout that could occur if we get above 60 on any of these smaller time frames, 2 hour, 1 hour, etc., and actually see a closure. That should lead to the peaks being tested again. AMC stuck for now, bit neutral as far as we see it. Let's move over to Tesla. Tesla also consolidating at that 700. You'll notice here, pulled back, didn't fill the gap, went back up, rallied, came back again. And off the back of some bad news, or some news coming out about it, it's just kind of solidifying its position after that nice breach of the series of lower peaks. We're looking for a 700 close plus to really start the participation phase. And of course, any pullbacks now, things like gap fills should be bought up by the market, you would think, and possibly even the 635 will be pressured up. So the bulls are ultimately here in a little bit more command than they have been recently on Tesla. You saw that initial excitement and volume come in. That's now dropping off. So we want to see a 700 plus break. That would be ideal. With all these candles here, the longer it springs and then coils and gets through, the better and more explosive the move is going to be if it does go to the upside. Let's have a look at something a little bit different today as we get into the stock markets around the world. I want to start with the Shanghai Composite. And the reason I want to do this on the weekly is because this zone has not been breached for years. That's right. This zone has not been breached for years. So we have a lagging market. The Shanghai Comp does not look like the US market, does it? It certainly doesn't look as strong. With the printing going on in China and obviously the big movements here and some of the stocks that we've been seeing like Baba recovering, JD, Baidu, just to name a few, there are some interesting plays there. There's obviously some other issues that you want to look at from the fundamental side. But we do have a weekly closure that's never happened, hasn't happened for a long time, above this area here. So around this 36.50 area. If we actually zoom in, the reason I've discounted these two is because we gapped up, sold off, gapped up, sold off. We never saw a bullish green closure. And notice what happened recently with the price action. Long leg doji weekly, long leg doji weekly are both indecision candles. Now, if we breach those indecision candles with a nice weekly close, what does that mean? Decision made. And it's a big thing for the price action. When the Chinese markets and Shanghai Comp goes on runs, just to put in perspective, if people aren't aware of this, take a look at some of the runs that have occurred in the past. When the sugar rush comes in, there's no market quite like this market. Bubbles can happen, and I mean bubbles with incredible valuations. You can just see it on the charts here. Obviously, you've got to be very, very careful, but it's interesting it's coming up to a 2015 high that we're now seeing being tested again. And I know that when this type of market fires, it can be quite aggressive, something to certainly look at. We'll go over here to the Nasdaq, another great day for the Nasdaq as it continues to push higher. I guess this is probably the cleanest way we can look at it. We've got our multi-month channel here, ascending channel, and you'll notice that it's just on its way towards this. We've been pretty consistent here. We've been bullish on the Nasdaq ever since the breach of this point. Double bottom here, breach, movement higher. It's been a great run so far for many people, especially the hyper stocks and biotech and all of those sectors. Even Apple, you know, they're all been good. The FANG has been good, and it's moving through. And when we get a bit of an idea of what we expect, I mean, look, they're probably going to be pullbacks, but the 20 moving average here, maybe on something like the 4 hour, might be something that we can use to, you know, hopefully look at market pullbacks as opportunities as day traders and as investors. You know, these are the type of zones that you would hope does happen. Now, if it hits the top of this range, and it does so in July, let's say, are we going to be concerned? I think depending on the speed at which it gets there, and this is certainly going very speedy, we don't want it to go too speedy like last time because then it creates a big correction. It's all about speed. That's what we're looking for. If it hits like this time over here, so if it goes incredibly fast, guys, moves super far away from the 20 moving average, the faster this goes, the more likely this resistance is to hold up and actually short off. So we're going to be watching it with laser eyes, with laser focus here on the channel. And remember to subscribe because there is going to be some fireworks coming, I believe. And depending on the speed here, we should know relatively soon what occurs. Let's have a look at a slower market, but still very quick. That's the US 500 S&P. And basically, this is a very nice 2-hour 20 exponential moving average that's been picked up. We did our live stream yesterday and we spoke about this level and phenomenal little buy zones here on the daily in terms of, on the 2 hour, I mean, in terms of just picking up this 20 moving average. It still continues to grind higher, got to 42.98 and the close, but realistically 4,300 was hit. It just wasn't breached yet. That's what the market will be looking for tomorrow. And I do expect a couple of slower days of trade ahead of the jobs numbers. We need to realize is the big news. Job numbers are mattered now for 2 to 3 months. And because of that, it's going to be small ranges, you would think, coming into the session. The Thursday, the Wednesday, these sessions are going to be potentially a little bit slower, followed by some fireworks in the Friday session. So definitely join us live. Speaking of fireworks, we have Bitcoin coming through with the goods. If we take a look here, big rejections across the board. That means buyers are starting to get committed around that 30,000. No surprise. They've pushed it higher. And when we start to look at the price action, you'll notice the daily closed above the long leg doji. Now, usually this means decision made. We're above the 20 exponential on the daily as well, which is the red line here. And this starts to push you in the direction of thinking, okay, 38K is the next stop for Bitcoin. And then after that, hopefully the 40,000 kind of level. If the bears get back control of the market, it's as simple as probably taking out this candle here. And all of a sudden we're back in this downtrend and we're starting to think about, wow, you know, we're going to put pressure back on the 30, potentially 29. And for anyone out there that's a bull on Bitcoin, we don't want this to fail here. If it does, it means the whales really want to get it underneath that big weekly. And remember, the big problem here, guys, is if we start breaching one of these points on the weekly, and let's say we had a candle that looked like this and it was bearish, filled in, red, and underneath here, that's going to be signaling some serious drop off. Unfortunately, things like 20K and stuff. So if you're a bull in Bitcoin, we need it to kind of start moving up now. 38K, hopefully the next level. And then after that, 40,000 probably hits this 20 exponential on the weekly. And if it breaches that, then of course the accumulation is most likely done, and it was a perfect Wyckoff event. If you're not sure what Wyckoff is, check our weekend video a few weeks ago and you'll see perfect Wyckoff. We do a big discussion, a special edition on it. Another good sign for Bitcoin is the whales have continued to reduce their short positions. You can see that here with BTC shorts. So they've been increasing them, decreasing them, increasing them again, and then of course going long. The more they do this and the more they reduce their short positions, the more likely it is that we have success in the markets in terms of bullish side. So where the whale money is always important, and we should be paying attention to it. I hope you guys enjoyed today's video. Obviously, we covered quite a lot. Remember to subscribe, hit that like button, and join us 1.5 hours early before the New York Open. Boy, oh boy, the markets are interesting right now, and this is a great time to become a trader, and probably a trader more than anything else in the markets, I would say, because there's just so much technical opportunity that's been occurring, and it's different to the recovery we saw last year. This is where the technicals start to play out and you start to get some really nice readable markets. Thanks so much, everybody. See you soon. Bye for now.